This company was once valued at $47 billion. 2 years later, it was nearly worthless. Not because of a crisis, not because of bad luck, but because of mistakes that were visible long before the collapse. What WeWork wasn't supposed to fail. The idea sounded simple and smart. Rent large office buildings. Break them into smaller spaces. Rent them to startups, freelancers, and growing teams. Flexible offices for a flexible generation. The spaces looked modern. The culture felt young. WeWork wasn't just selling desks. It was selling a lifestyle. Why investors believed? Investors didn't see WeWork as a real estate company. They saw it as a technology company. And that difference mattered. Tech companies scale cheaply. Once the product is built, serving more users costs almost nothing. Real estate doesn't work that way. Every new location is expensive. Every building adds fixed costs. But WeWork was valued like software. And the money kept coming in. The valuation climbed. 10 billion, 20 billion, eventually $47 billion. Mistake 1. Confusing identity. This was the first major mistake. WeWork confused what it was with what it wanted to be. The company signed long-term leases, sometimes for 10 or 15 years. But it rented those offices on short-term contracts. When demand was high, this worked. When demand dropped, the costs stayed. A tech company can scale down quickly. Real estate cannot. WeWork looked like technology, but it behaved like real estate. Mistake 2. Growth over stability. The second mistake was growth at any cost. New locations opened faster than old ones could become profitable. As long as investment money was coming in, losses were easy to ignore. Growth made everything look successful. But it also hid the risks. The company wasn't building a stable foundation. It was stacking momentum on top of momentum. And momentum only works as long as nothing slows it down. Mistake 3. Unchecked leadership. The third mistake was leadership. Adam Neumann wasn't just the CEO. He became the center of the company. Decisions became personal. Control became weaker. Conflicts of interest were ignored. Spending increased. Discipline disappeared. When one person becomes untouchable, problems don't disappear. They multiply quietly. The collapse. In 2019, WeWork prepared to go public. For the first time, the numbers were fully exposed. Investors reacted immediately. The valuation collapsed. Confidence vanished. The IPO was pulled. In a matter of weeks, a $47 billion company was forced to confront reality. The real lessons. WeWork didn't fail because of one bad decision. It failed because 3 risks aligned at the same time. A business model that couldn't scale safely. Growth that hid losses instead of fixing them. And leadership without enough control. Any one of these is dangerous. Together, they are fatal. This pattern isn't rare. It appears again and again. In companies, markets, and personal finance. Ending. WeWork didn't collapse overnight. It collapsed slowly, while everyone was watching and applauding.